Are you stuck in decision limbo? Here's the secret to taking action and topping the stock market. Welcome to the program You Can Surpass the Stock Market. Here I show you how you can reach the peak where you arrive in the stock market without getting overwhelmed. I am Francisco and I'm an expert in finding stocks that can top the S&P 500. And today we're going to talk about overcoming analysis paralysis. How to act quickly and make informed, agile decisions. So let's begin by understanding what analysis paralysis really is. It's that state where you have so much information and so many options that you become immobilized, unable to make a decision. In the realm of investing, this can be particularly detrimental. With endless market data, financial news, and expert opinions, it's easy to get stuck in a cycle of overthinking. Analysis paralysis often leads to missed opportunities. You might find yourself endlessly comparing stocks, reading one or more reports, or waiting for the perfect moment that never comes. Now, it's important to clarify what overcoming analysis paralysis is not about. It's not about making snap decisions without any research or disregarding due diligence. We're not advocating for reckless investing or ignoring the fundamentals. Instead, it's about finding a balance between thorough analysis and timely action. So, what exactly does overcoming analysis paralysis involve? It's a method of streamlining your decision-making process, allowing you to act swiftly without sacrificing the quality of your decisions. This approach addresses the pain of feeling overwhelmed by too much information and the frustration of watching potential gains slip away because you couldn't decide in time. You save time, reduce stress, and increase the likelihood of achieving better returns. For example, consider an investor who spends weeks analyzing a stock, only to find that by the time they're ready to invest, the stock price has already increased significantly, reducing potential gains. By overcoming analysis paralysis, you could have identified the key factors more quickly and invested earlier. Imagine you are an investor who's been closely watching a promising tech company's stock. You've done your homework, read countless articles, dissected financial statements, and even followed the company's leadership on social media. Every day you find new information that both excites and concerns you, leading to more questions and more research. Weeks pass and you're still deliberating, caught in the web of analysis paralysis. Meanwhile, the stock has been climbing steadily. Early investors are reaping the benefits, and market analysts are buzzing about its potential. By the time you finally decide to invest, the stock has already surged, and much of the significant growth has passed. You realize that your prolonged indecision caused you to miss out on substantial gains. Now imagine you in a different scenario. You've set clear investment criteria aligned with your financial goals. When the same tech company catches your eye, you quickly evaluate it against your predefined checklist: solid revenue growth, innovative products, strong leadership, and favorable market trends. It ticks all the boxes. Without getting entangled in endless analysis, you make an informed decision to invest promptly. As a result, you enter the market early, and as the stock rises, you watch your investment grow. You've capitalized on the opportunity while others are still mired in overthinking. This shift from hesitation to decisive action illustrates how overcoming analysis paralysis can significantly enhance your investment outcomes. By streamlining your decision-making process, you not only seize opportunities ahead of the crowd, but also reduce stress and free up time. Instead of being paralyzed by too much information, you focus on key factors that align with your investment strategy. By learning to make decisions efficiently, you transform potential hesitation into confident action, allowing you to navigate the market more effectively. This proactive approach can lead to better returns and a more satisfying investment experience, proving that overwhelming analysis paralysis isn't just beneficial, it's a game changer for busy investors like you. So, how can you start seeing these remarkable results in your own investment journey? Imagine having a personalized roadmap that guides your investment decisions swiftly and confidently. By creating a checklist tailored to your financial goals, you establish a consistent framework for evaluating opportunities. This not only saves precious time, but also ensures you don't miss out on lucrative investments due to overanalysis. Consistency and commitment to your criteria becomes your secret weapon against hesitation. In today's fast-paced market, information is power and timing is everything. Utilizing cutting-edge technology that provides real-time data and alerts puts you ahead of the curve. When your predefined conditions are met, you will receive instant notifications, empowering you to act promptly. This taps into the urgency of the market movements, so you seize opportunities while others are still deliberating. You don't have to navigate the complex investment landscape alone. By delegating research tasks to investment independent research or relying on curated investment reports, you streamline your information intake. This not only reduces overwhelm but also leverages the authority of experts. With their insights, you make informed decisions faster, freeing up your time to focus on what you do best. As you consider adopting a more agile approach to your investment decisions, it's natural to have reservations. After all, hard-earned money is on the line, and making the right choices is crucial. But if you don't analyze everything thoroughly, won't you risk making bad investments? It's understandable to worry that a quicker decision-making process might lead to mistakes. However, focusing on key metrics rather than every available detail can actually enhance your decision quality. Overanalyzing can be just as detrimental as underanalyzing, leading to missed opportunities and unnecessary stress. By identifying the most critical factors that align with your investment goals, you streamline your analysis without sacrificing thoroughness. This is where the power of a predefined checklist comes into play. It allows you to consistently evaluate opportunities based on what's most important to you. Leveraging efficient tools and resources, you can filter out the noise and focus on data that truly impact your investment's potential. Remember, many successful investors use this approach. They're not cutting corners, they're applying consistency and commitment to their strategy. By doing the same, you can make informed decisions swiftly, reducing the risk of analysis paralysis while maintaining confidence in your choices. And what if you don't have the time to learn new strategies or tools? Time is indeed a precious commodity, especially for someone as busy as you. The idea of adopting new strategies or learning new tools might seem daunting. However, these strategies are specifically designed for individuals with limited time. Investing a small amount of time upfront to set up efficient systems can save you countless hours in the future. Consider this: the initial effort is minimal compared to the long-term benefits. By utilizing technology that provides real-time data and alerts, you automate parts of your decision-making process. This means less time spent sifting through information and more time available for other priorities in your life. Think of it as an investment in yourself. The time you spend now learning these tools pays dividends by simplifying your investment process. You'll gain peace of mind knowing you can act promptly when opportunities arise without the need for extensive analysis each time. In essence, you're trading a little time from now for a lot more time and potentially better returns in the future. But isn't acting quickly just another form of impulsive decision making? It's a common misconception that speed equates to impulsiveness. Acting quickly doesn't mean acting without thought. It means making informed decisions efficiently. By establishing clear investment criteria and utilizing reliable tools, you ensure that your swift actions are grounded in solid analysis. Impulsive decisions are typically based on emotions or fleeting trends without substantial backing. In contrast, your decisions are guided by a structured approach that emphasizes authority, relying on verified data and proven strategies. This method reduces emotional biases, allowing you to focus on factual information that truly matters. Moreover, the market rewards timely decisions. Opportunities can emerge and fade rapidly, and being able to act when conditions are right is crucial. By overcoming the hesitation that comes with overanalysis, you position yourself to capitalize on these opportunities. This proactive stance is not about recklessness. It's about strategic agility. By addressing these objections, you're not just alleviating concerns, you're empowering yourself to take control of your investment journey. These strategies for overcoming analysis paralysis are tailored to help you act decisively without compromising the quality of your decisions. Let's dive into a common pitfall that many investors fall into when trying to overcome analysis paralysis. The temptation to bypass analysis altogether. In the rush to make swift decisions and avoid missing out on potential opportunities, some investors resort to acting on hot tips from friends, family, or social media influencers without conducting any personal research. This shot from the hip approach might seem like a quick fix, but it often leads to disastrous financial outcomes. Imagine investing your hard-earned money based solely on a friend's enthusiastic recommendation, only to watch that investment plummet because it wasn't backed by solid fundamentals. This scenario is all too common and highlights the dangers of relying on sufficient or unreliable information. The fear of missing out can push you into hasty decisions that aren't aligned with your investment goals or risk tolerance. This method can result in significant financial losses and increased volatility in your portfolio. When you make investment choices without proper analysis, you're essentially gambling rather than investing. The absence of due diligence removes the safety net that thorough research provides, leaving you exposed to unnecessary risks. Over time, these poor choices can erode not only your wealth, but also your confidence in managing your investments. Moreover, bypassing analysis undermines the importance of informed decision making, a cornerstone of successful investing. It disregards the authority of credible data and expert insights, which are crucial in evaluating the true potential of an investment. Without this foundation, you are more susceptible to market hype and speculative bubbles that can burst at any moment. Consider the psychological impact as well. Repeated failures due to uninformed decisions can lead to stress and anxiety, making you hesitant to invest in the future. This hesitation can cause you to miss out on genuine opportunities that have been carefully analyzed and vetted. It's a vicious cycle that starts with bypassing analysis and ends with paralysis, brought only by fear of making further mistakes. So, what's the alternative? Instead of abandoning analysis, focus on streamlining your decision-making process. This means honing in on key metrics that matter most to your investment strategy and utilizing efficient tools to gather and interpret data quickly. By balancing speed with due diligence, you can make timely decisions without sacrificing the quality of your analysis. Leverage technology and authoritative sources to stay informed. Financial platforms, credible news outlets, and professional advisors can provide you with reliable information without overwhelming you. This approach satisfies the need for urgency while maintaining a solid foundation of knowledge. In essence, overcoming analysis paralysis isn't about cutting corners. It's about cutting through the noise. By avoiding the trap of bypassing analysis, you protect yourself from unnecessary risks and position yourself for long-term success. Remember, informed agility beats reckless haste every time. Don't let the allure of quick fixes derail your financial journey. Stay committed to making informed decisions, and you'll build not only a robust portfolio, but also the confidence to navigate the complexities of the investment world. Your future self will thank you for due diligence and care your investment today. Now, let's construct a step-by-step guide to help you overcome analysis paralysis efficiently. Start our investment journey by clearly defining what you want to achieve. This is the crucial first step that sets the tone for all your future decisions. Imagine the confidence you'll feel knowing exactly what you're aiming for. Perhaps you're seeking long term growth, aiming to build substantial wealth over time to secure your retirement or fund future endeavors like your children's education. For example, you might invest in a diversified portfolio of growth stocks, such as companies in the technology or healthcare sectors that are innovating and expanding rapidly. By focusing on stocks with a strong potential for appreciation, you allow your wealth to compound over years, harnessing the power of exponential growth. This strategy is about future pacing, where you visualize the benefits you'll enjoy down the line. Imagine retiring earlier than planned or affording that dream vacation home because of the smart stock investments you make today. Maybe you're after immediate income to enhance your financial freedom right now. For instance, investing in dividend paying stocks can create a steady revenue stream. Consider allocating funds to well established companies that have a history of paying consistent dividends, such as those in the utilities or consumer staples sectors. By selecting stocks that provide regular dividend payments, you can supplement your income without selling your shares. This satisfies the need of instant gratification, providing tangible benefits in the short term. Picture receiving quarterly dividend checks that you can use to supplement your income, fund a hobby, or reinvest for even greater returns. Perhaps capital preservation is your top priority. You want to safeguard your hard earned money against market volatility while still participating in the stock market. In this case, you might focus on investing in blue chip stocks, large, well established companies with a solid track record of stability and resilience during economic downturns. For example, investing in companies that are leaders in their industries with strong balance sheets and consistent earnings can help protect your capital. This strategy is about security, appealing to your desire for stability and peace of mind. Imagine sleeping soundly at night knowing your stock investments are in robust companies that can weather market storms. Alternatively, you might seek a balanced approach, combining elements of growth, income, and preservation within your stock investments. For example, allocate 50% of your portfolio to growth stocks for long-term appreciation. Dedicate 30% to dividend-paying stocks for immediate income. Reserve 20% for stable blue-chip stocks to preserve capital. This diversified stock strategy allows you to benefit from multiple investment objectives simultaneously, reducing risk while maximizing potential returns. Visualize building a robust stock portfolio that grows over time, provides regular income, and protects your principal, all working together to achieve your financial aspirations. Having clear goals helps narrow your focus, eliminating distractions and unnecessary options. Once you've committed to specific objectives, you're more likely to make decisions that align with them. Staying consistent in your strategy. Financial authorities and successful investors emphasize goal setting because it provides direction and purpose, making your investment decisions more straightforward and effective. Consider the urgency of defining your goals now rather than later. Every moment without clear objectives is a missed opportunity to move closer to your financial aspirations. The stock market is dynamic, and delays can mean the difference between capitalizing on a lucrative opportunity or watching it pass by. Envision your future self thanking you for the clarity and foresight you have today. By setting specific, measurable goals, you transform abstract desires into actionable plans. This not only enhances your ability to make informed decisions, but also reduces the overwhelm that often leads to analysis paralysis. Remember, you're not just investing money, you're investing in your future. Clear goals act as your compass, guiding you through the complex world of stock investing with confidence and purpose. Don't let indecision or lack of direction hold you back from achieving the financial success you deserve. So take action now. Sit down and write out exactly what you want your stock investments to accomplish. Be as detailed as possible. Assign timelines, financial targets, and personal milestones. The simple yet powerful step will empower you to make agile, informed decisions, turning your financial dreams into reality. By defining your investment goals today, you're not just setting a target, you're setting yourself up for success. The clarity you gain will be the catalyst that propels you forward, ensuring that every decision you make is a confident step toward achieving what truly matters. To make confident and timely investment decisions, it's essential to set specific, measurable criteria that align with your financial goals. Imagine having a clear roadmap that guides you to the right stocks without hesitation. This approach not only simplifies your decision making process, but also increases your chances of success in the market. Suppose you're evaluating two tech companies. Company A has a P ratio of a lower P ratio may indicate that Company A is undervalued compared to Company B, potentially offering a better investment opportunity. By focusing on PE ratios, you can identify stocks that are priced attractively relative to their earnings. If you're seeking immediate income, look for companies with a high dividend yield. For instance, a utility company offering a 5% dividend yield provides a steady income stream. This satisfies your need for regular returns while holding on to the stock for potential growth. A company with a debt to equity ratio of 0.5 has less debt relative to its equity, indicating financial stability. In contrast, a ratio above 1 might signal higher risk. Choosing companies with lower debt levels can protect your investments during economic downturns. Invest in companies led by experienced and visionary leaders. If a CEO has a track record of driving growth and innovation, like Apple's Tim Cook, their leadership can be a strong indicator of a future success. Companies with a unique product, patented technology, or a strong brand like Coca-Cola's global recognition have a competitive edge. This advantage can lead to sustained profitability and market dominance, enhancing your investment's potential. By setting these specific criteria, you reduce uncertainty, enabling you to act swiftly and confidently. Don't let your indecision hold you back. Define your criteria today and take control of your investment journey. Remember, the clarity you establish now becomes the foundation for making informed, agile decisions. Your future financial success depends on the actions you take. To make informed investment decisions swiftly, it's crucial to identify a few reliable sources of information. Imagine the clarity you'll gain by focusing on trustworthy outlets, reducing the overwhelming influx of data. Limiting your sources not only cuts down on noise, but also minimizes conflicting information, allowing you to act confidently and promptly. Morningstar Equity Research is known for its objective and thorough evaluations of stocks. Morningstar offers detailed analysis that can simplify your decision-making process. Their star rating system highlights the strengths and weaknesses of potential stock investments, helping you focus on what truly matters. Imagine confidently choosing stocks because an authority like Morningstar backs your decisions. If immediate income is one of your goals, Dividend.com is an invaluable resource. It provides comprehensive data on dividend-paying stocks, including dividend history, yield, and payout ratios. By focusing on this reliable source, you can quickly identify stocks that offer consistent dividends, aligning with your need for regular income. Think about the satisfaction of receiving steady dividends from well-researched companies. Seeking Alpha offers a wide range of investment research and analysis from both professional analysts, and experienced investors. The platform provides insights into market trends, company performance, and stock valuations. By tapping into this wealth of information, you can make informed decisions swiftly. Visualize making a confident investment because you leveraged insights from a community of experts. Imagine the time you'll save by not sifting through endless articles and opinions. Envision making decisions with confidence, knowing your information comes from credible and respected sources like Morningstar, Dividend.com, and Seeking Alpha. This clarity empowers you to act swiftly, keeping you ahead in the fast-paced world of stock investing. Take action now. Choose these or other trusted sources that best align with your investment goals and commit to following them regularly. By streamlining your information intake, you set yourself up for more efficient decision making and ultimately greater investment success. To make swift and informed investment decisions, leveraging stock screeners and financial tools is essential. Imagine the efficiency you'll gain by filtering stocks based on your specific criteria within minutes. This approach not only saves you valuable time, but also ensures you don't miss out on promising opportunities. One such powerful tool is StockRover.com. This platform offers advanced stock screening capabilities, allowing you to apply over 650 financial metrics to filter stocks that meet your investment goals. Whether you're looking for stocks with low P/E ratios, high dividend yields, or specific debt-to-equity ratios, StockRover provides a customizable interface to pinpoint exactly what you're seeking. Let me tell you how StockRover has totally transformed the way you invest. It might just do the same for you. You know how time-consuming it can be to sift through tons of stocks, right? With StockRover, you can set your own criteria. For example, you might look for companies with a P/E ratio under 15, a dividend yield over 3%, and a debt-to-equity ratio below 0.5. Imagine instantly seeking stocks that match exactly what you're after, no more endless scrolling on second guessing. What's awesome is that you get access to detailed company profiles right at your fingertips. You can dive into things like the company's management team and what gives them a competitive edge, all within the platform. Plus, StockRover pulls in research from reliable sources. So you're tapping into some serious authority without having to hunt it down yourself. It feels good knowing you're making decisions based on solid info, doesn't it? We all know that timing can be everything in the market, but quickly spotting stocks that fit your criteria, you can act fast and potentially jump on opportunities before others do. And because you're focusing only on what matters to you, you avoid that overwhelming flood of information that can lead to analysis paralysis. It's like cutting through the noise and getting straight to the point. Honestly, using StockRover has made investing so much more straightforward and less stressful for me. If you're looking to streamline your investment process and make quicker, more confident decisions, I definitely recommend giving it a shot. After all, who doesn't want to make the most of their time and money? To make agile and confident investment choices, it's important to set a reasonable but firm timeline for your decisions. Let me give you an example to illustrate how this works in practice. Imagine you've identified a promising tech stock that fits your investment criteria. Let's say it's a company pioneering in artificial intelligence with solid fundamentals and strong leadership team. Instead of getting caught in the endless cycle of analysis, you commit to making a decision within 48 hours. During this 48-hour window, you focus on gathering key information. Review essential data using tools like StockRover to confirm it meets your P/E ratio, dividend yield, and debt-to-equity ratio requirements. Read up-to-date analysis from trusted sources like Morningstar, Dividend.com, or Seeking Alpha to get expert opinions. Assess qualitative factors such as the company's management quality and competitive advantage. By setting this firm deadline, You create a sense of urgency that motivates you to act promptly without feeling overwhelmed. Implement a go no go checklist to make confident and timely investment decisions. It's crucial to set a reasonable but firm timeline and create a simple checklist for evaluating potential stocks. Let me give you an example of how this works in practice. Imagine you come across a promising stock. Let's say it's a renewable energy company that's gaining attention. Instead of falling into analysis paralysis, you give yourself 48 hours to decide whether to invest. This creates a sense of urgency without undue pressure, tapping into the mental trigger of urgency to motivate you. During this 48-hour window, you use a simple checklist to evaluate the stock. P ratio under 20. Does the company's price to earnings ratio indicate it's reasonably valued? Indicates that it's reasonably valued. Dividend yield above 2%. Will you receive immediate income through dividends? Debt to equity ratio below 0.5. Is the company financially stable with manageable debt levels? Positive earnings growth. Has the company shown consistent earnings growth over the past 5 years? Strong management team. Do the company's leaders have a proven track record? Competitive advantage. Does the company have a unique position or technology that sets it apart? If the stock meets all your criteria, it's a go. If not, it's a no-go. This binary approach simplifies decision making by eliminating gray areas. Once you've committed to your criteria, you stay consistent in applying them. Build your decision-making muscle by practicing with smaller investments. This reduces the stakes and allows you to refine your process. Let's walk through a practical example of what we have been talking about. Suppose you're interested in investing in the technology sector. Your investment criteria include companies with a P ratio below 25, revenue growth above 10% annually, and a strong balance sheet. You use a stock screener to filter companies in the tech sector that meet these criteria. The screener narrows down thousands of stocks to, say, 5 potential candidates. Next, you review the latest earnings reports and news headlines for these companies, focusing only on information that could impact their financial performance significantly. With this focused approach, you can evaluate each company efficiently and make an informed decision within your decision-making timeline. What if your criteria lead you to miss out on great investments? No criteria are perfect, but they help you stay focused. Over time, you can adjust your criteria based on your experiences and changing market conditions. Also, stay aware of analysis paralysis triggers. Recognize when you're overthinking and take a step back. Sometimes stepping away for a moment can bring clarity. It's important to address these psychological factors. Fear of making the wrong decision often fuels analysis paralysis. Accept that no investment is without risk and that occasional mistakes are part of the learning process. Building confidence is key. The more you trust your process, the easier it becomes to make decisions swiftly. Today, take 15 minutes to set up a stock screener based on your investment criteria. This tool will help you quickly identify potential investments that meet your standards. To wrap things up, overcoming analysis paralysis is about balancing sufficient analysis with timely action. By defining your goals, establishing clear criteria, and streamlining your information sources, you can make informed decisions more efficiently. I encourage you to start implementing these strategies today. The sooner you begin, the sooner you'll start seeing the benefits in your investment outcomes and overall peace of mind. If you found this video helpful, please subscribe to the channel for more insights on making smarter investment decisions. Until next time, happy investing!